Today is going to be a big day out here for the stock market as we have the CPI data coming out. The NASDAQ is sitting at all-time highs. The SPY sitting at all-time highs. But one thing I forgot to mention yesterday was the VIX. The VIX was on the rise as the indices were making all-time highs. And I have a question. Is Tom Lee wrong this time? Here at 8:30, we're going to actually see if Tom Lee is wrong about this one thing. And we're going to talk about something else Tom Lee could be wrong about. But essentially, Tom Lee is saying inflation will fall like a rock. And Tom Lee also goes on to say why June CPI is going to be a big moment for stock. To summarize what this article is going to say, the June CPI report will show a continued drop in inflation, according to Tom Lee. Lee expects a soft June CPI report will push the Fed to cut rates more than 2 times this year. And if we look at that statement right there, cut rates more than 2 times this year. So what Tom Lee is going on to say is either the Fed is going to cut rates out here in July, or the Fed is going to cut rates at the next 3 meetings. Now, let me know in the comment section down below. Do you guys agree with Tom Lee that the Fed is going to cut rates more than 2 times this year? Because that's not what the Fed watch tool is actually projecting. They're only projected 2 rate cuts out here this year. And remember, earlier on in the year, everybody thought 6, 7 rate cuts, and now it's dwindled down to only 2. Now, Tom Lee also goes on to say it's going to be a week of reckoning, and I mean reckoning of how people view inflation in the state of the economy. Now, we all know Tom Lee has made very bold claims in the past. One such claim would be that the S&P 500 is headed to 15,000 by the end of the decade. That would be absolutely crazy. However, it's not out of the possibilities, because let's keep in mind, this article came out January 1st. The stock market could soar as much as 30% next year as expectations grow. The Fed will slash rates, inflation drop like a rock. And if you look at, let's see if we can find the date on this article right here. You can see January 2024. However, we found out that this year, inflation was a little bit stickier than what Tom Lee and other people believed at that point. Now, Tom Lee also predicted back then that the S&P 500 would notch 5,200, implying a 9% increase for the index. However, if we look right down here, we can see we're in July. Year to date, the S&P 500 is up 18%. We can't really say he overestimated. If you look at the S&P 500, we're trading at 5,600. However, Tom Lee also went on to say there's a 50% chance the index soaring past that thanks to century-long trend. And he actually said we could soar as much as 30%. So if you think about that, we're a little bit more than halfway there. Are we going to see the S&P 500 actually hit 30% this year? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. We come over and we look at the fear and greed index this morning. We're sitting at 58. We're back into greedy territory. It's been a while since we've been over here. Then we look at the most recent investor sentiment survey. What do we find? We had another very hot reading, came in at 49.2. Now, the previous reading was 41.7, so that is a substantial drop. That's one of the highest readings that we have seen over the last several weeks. And it's really no surprise, because when we look at the S&P 500, we're sitting at all-time highs. Come over, look at the NDX, sitting at all-time highs. But when we come over, we look at, let's say, the diamonds. Diamonds had a strong showing yesterday, but the diamonds are still not at all-time highs. Neither is the Russell 2000. Then this morning, we come over and take a look at the dollar index. Now, so far this morning, we see the dollar index is down 17 cents. We look out here on the 5-minute chart. The dollar index is near the session lows. However, it's either going to accelerate or we're going to see it reverse come when? Right around 8:30 once that CPI report is released. Now, with all these talks about rate cuts, I want to remind you guys, anytime the Fed has went on an aggressive rate cutting campaign, look at the drops that we've seen in the stock market. The lowest has been 27%. The greatest has been 58%. So you got to be careful what you wish for. Now, when the Fed does signal that they are starting to lower rates, you most certainly better believe we're probably gonna have a sugar high, blow off top type of rally. However, we don't want to be caught on the other side of that rally once stocks start to sell off. Keep in mind, the Fed never cuts rates out of the goodness of their heart. And right now, we're still in the midst of this very bullish stat that I've been sharing with you guys since last weekend, which showed from July 8th through July 15th, the stock market is a very bullish reading when April 8th through July 8th, we're up 5% or more. Out of the last 19 occurrences for the S&P 500, we've been up 17 times, only down 2. And for the NASDAQ, we've been up 22 out of the last 24 occurrences, only being down 2. So it's no surprise this week has been extremely bullish. However, are we going to now start to see a little bit of weakening in the market? Because when we look at just a basic day count, right? 1 up day, 2 up day, 3 up day, 4 up day, 5 up day, 6 up day, 7 up days in a row without any type of pullback in the market. We come over and look at crude oil. This morning, crude oil is basically flat, went up a little bit last night, came back down. We've still been unable to re-overtake that rise in trend line that we broke down from. We also look at the MACD indicator starting to pinch lower, but one thing that's a little bit concerning, if crude oil continues to rally, that is going to cause problems for inflation. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. All right, so we just got the CPI data was released. What do we see? Month over month, negative 0.1. Year over year, 3.0. And I told you guys in yesterday's video, I could tell from watching JPowell's body language, CPI was probably going to come in better than expected. And what do we see with the dollar index? Absolutely getting destroyed out here. Now, as we look at the SPY, can we say another new all-time high? This is going to be another gap in the market unless for some way, somehow, we see this starting to reverse. We come over here, we look at the 30-minute volume profile levels, and what do we see? Huge MACD divergence on the 30-minute chart. Where are we trading? Right now, we're above all-time highs. When we look at value area high, that'll come in at 561.57. The point of control will come in at 559.98. And value area low will come in at 558.73. Now, if you're an aggressive trader, then you can essentially look for a short if we start breaking back below the high from yesterday, targeting a quick little scalp at value area high. But watch out for this minus development area, anywhere from about 560.64 to about 560.50. We could just simply come down, bounce, and go back up. I will not be the slightest bit surprised if we form a D as in dog shape profile out here today. Keep in mind, we do have the PPI data coming out tomorrow. When we look at the composite profile, we see the futures making new all-time highs. We look out here on the daily, big bullish candle on the way up, and we're going to see, do we start to come back down, or is this just clear sailing? All we're going to do is rally all day long once again. You can see we are clearly above yesterday's value area high. We did not make it back down into that area, but we did make it into the first minus development area before we rejected up and out of this area. Now, the overnight volume profile levels are going to be very interesting as they go to mature. So that's something we're going to want to keep an eye on. Now, as we come over, look at the NASDAQ, you can see we're trading at new all-time highs. We come over here on the 30-minute chart, clearly see we are above yesterday's high, and there's no ifs, ands, or buts about it. We look at value area high, it comes in at 503.54. Point of control is down here about 502.31. Then we have value area low at 500. So it looks like Tom Lee may be correct again. Inflation is starting to come back down, and we're going to see if he's actually going to also be correct about the Fed cutting rates 3 times this year. Now, if you're looking to short the NASDAQ, just be very careful trying to short all-time highs. I have no levels up above us, and if we start getting back below yesterday's high, aka value area high, we can look to target the point of control and then value area low. And one thing to note, 2 days on the QQQs with consecutive gaps up. We come over here and look at the NASDAQ. I feel like it's been up ever since the low of last week. We're almost up here at 21,000. We look over here on the daily profile. Look at this overnight. Consolidate, consolidate, consolidate. Boom. Rocket ship on the way up. Right now, we see the NASDAQ is actually up 71 points. And keep in mind, we still have the untested point of control down here. And we're going to see, is this nothing more than a euphoric push up, which we talked about last night in the stream, and then it gets rejected on the way back down. But as we come over and start to look at the overnight volume profile levels, I want you guys to pay very close attention. We have a huge minus development area that is forming right now on the developing profile, and that comes in about 56.94 all the way down here to about 56.86.75. Now, I do anticipate we'll probably come back down to the breakout point at some point today, and we got to ask ourselves, is this a short-term top in the market? Was all the movement that we've had going up nothing more than the bigger players already gaming what they knew was going to be a very good CPI reading coming out? And now that we've had the good number come out, will this be a case of buy the rumor, sell the news, and we start coming back lower? If indeed we do start to go substantially lower today, let's not forget the minus development area that we talked about in last night's video, anywhere from 56.55 down here to about 56.53.75. I'll look for the market to come down there. Now, the first time we get down there, I'll look to see, can we get a rejection back up? And this could set up a large D-shaped profile. Now, I don't know that we make it all the way down there. We've already had a 30-point range. And right now, the entire range, average range for the S&P 500 is only 40 S&P points. We come over and we actually look at the overnight volume profile levels. You can see right now, we are trading below the overnight value area high, which comes in at 5697.00. The point of control will come in at 5684.50, and value area low will come in at 5676.00. Now, since we've just been above value area high, as long as we are below that price point, I want to target the point of control, but you might want to front run that just a little bit right to the edge of this minus development area. Then value area low, anything below 5876, then just know I want to target yesterday's value area high at about 5672.75. Then from there, I want to see, can I target down here towards the minus development area and maybe even the untested point of control, but just be on high alert. If we come down towards the minus development area, we could get a rejection up and out of this area. We come over and we look at the NASDAQ. What do we see? Well, we've already been above the overnight value area high, which comes in at 20,944.50. The point of control comes in at 20,882.00. Value area low will come in at 20,855.50. So as long as we are below value area high, I want to stay on the sell side of the trade. And I really think we're going to come down towards the bottom of the minus development area at about 20,899. Anything below that, I want to target the point of control. Value area low, anything below value area low, I do want to see, can we make it down towards the point of control? But just be well aware, this area right here on the profile, somewhere in the ballpark of about 20,806.75, could be an area where the market basically dips down to, and then we reject up and out. I'm going to go ahead and draw a line right in that area so I can keep an eye on it. If I start to see rejections at this area, this will be an area where I might want to play a little bit of a bounce up. But if we bounce up and we start coming back down once again, watch out, we'll probably flush and come all the way down towards the untested point of control. Now, if you guys want to see how I use Bookmap to find high probability trading opportunities, watch this video right here.